You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Miax, one of the fastest options platforms in the world. Miax is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo, coming at you live here Friday, August 2nd, 1 p.m. Central, 2 p.m. Eastern, our usual. Same bat time, same bat channel. You guys know how to get at us. If you want to, of course, listen live, the Mixlr feed is the way to do that. Or if you want to listen after the fact, your podcast provider of choice is the place to go. Make sure, however you listen live after the fact, you hit us up, questions, comments, insights, pearls of wisdom we do mostly enjoy hearing from you guys. I am very pleased to be joined, though, today in the studio. We got an old friend of the program back from extended hiatus, extended sojourn. What do they call it in the academic world? Sabbatical. That's right. Back from his extended sabbatical on Volatility Views, our old friend, Mr. Russell Rhoads, holding down the fort now as the Director of Derivatives Research at the Tabb Group. Mr. Rhoads, welcome back to Volatility Views, sir. It has been too long.
It has been too long. Who are you calling old?
Old friend, I said. Experience, acquaintance. Long-standing acquaintance.
One of those phrases that you're not supposed to use is old girlfriend.
Did I call you that?
No, you didn't. But old friend is very close.
A much higher magnitude.
If you Freudian slipped with old girlfriend about me, man, the Twitter sphere would go nuts.
Maybe we should do that. Gin up a little controversy here in the vol space. It has been a while since you sat in that chair, but the show goes on. The joy, the fun of volatility continues anew. And I do believe we are joined over there in the land of the pit by Mark Sebastian, the grease meatball himself from optionpit.com by way of Carmeline Capital. Mr. Meatball, welcome back to the program, to you as well.
Good to be here and excited to have the gang back together. You know, this is Russell might be the second longest standing co-host next to. He's up there with along with you and me, I would say. Wouldn't you? He was
on there for a while. I would say, Russell, how long were we running your hot seat for? A couple of years, I think. There, right?
At least I feel like it was 3 or 4.
Yeah.
Now it feels like a decade.
I was gonna say it feels like at least 20. So yeah. It must have been at least a couple.
Did we get his? Does he have some options that expire on non-standard dates some trades ready for us so that we can run his usual music.
You'll have to stay tuned
to
find out.
Can't kick that off the show. We can't give away the lead like that at the top of the show. No, we gotta stretch it out a little bit as we head on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is the portion of the show where, surprise, surprise, we review what the heck is going on this week and indeed today from volatility trading and trending and analysis and all sorts of fun perspectives. And there's a lot of fun. I guess maybe it depends on your definition of fun, but there's certainly a lot going on out there in the volatility space today. You know, we were talking about it yesterday on our option block program, how the worm just turned on a dime in the middle of that program. We had started off the day, all was right with the world. Remember, of course, everyone was waiting for the Fed on Wednesday. They didn't exactly like what they heard out of the Fed. Market sold off about 1% yesterday, at least going into midday. Everything was right with the world again. Everything was up 1 to about 1.5% out there in the NASDAQ. Green on the screen, vol coming in pretty hard, and then the worm just turned. The worm turned on a dime. We had the administration. Maybe they didn't like what they heard out of the Fed as well. Maybe they wanted to perhaps kick up their chances of a rate cut in September. Either way, the administration, and of course, announcing they're extending the trade war to the rest of the goods that had pretty much escaped it. So roughly $300 billion worth of goods getting the 10% tariff. Markets, go figure, not liking an exacerbation of the trade war. We went from up 1.5% in the NASDAQ to down about 1%. Then it kind of mitigated somewhat. And now today, the sell-off is continuing apace here. We're seeing the Dow, actually the laggard today, only off a paltry 0.75%. S&P off exactly 1% coming into the show here. In NASDAQ, once again, leading the charge in the wrong direction, off 1.6, almost 1 2/3% here, as the market just not liking any of this news of the exacerbation of the trade war. And of course, all this red on the screen means a lot of green in the vol space. Spikes and VIX cash both feeling their oats today. Spikes at almost a 20, threatening the 20 handle right here, listeners, up to about 1980 or so. That puts it up over 7 handles from where it was this time last show. VIX cash, the comparative laggard, only around 19.5 or so. So up only, let's say, about 7.5 handles from where it was this time last. I think it's fair to say none of us, I think it was me and the Rock Lobster last week, I don't think either of us had a 20 handle in our back pocket for the crystal ball. So I don't think there's going to be a lot of winners out there this week. Also, our old friend VVIX, remember we said it last week, we hinted at it. We said, it's starting to threaten, it's getting into the low 80s. I think it was around 81. It's starting to get to that level where maybe you might want to pay attention to it because things tend to happen when it gets down to threatening the 70s. And lo and behold, did it happen? It exploded up with a gusto. We're up 25 handles from where we were this time last week out there in the VVIX. So a lot going on. Let's start there, Mr. Rhoads. I think later, Mr. Meatball kind of gave it away. They'll probably hit a little bit of weekly action maybe. But before we get there, catch us up. It's been a while since you've been on the show. You've been on TWIFO a couple of times, so we know you're hanging your hat in the commodity space a lot these days. But what is going on in your neck of the woods from a volatility perspective, and also what is lighting up your tape here this week and in this crazy tumultuous volatility week?
Lighting up my tape, man. Well, first off, I'm actually, it was a year ago yesterday that I joined Tabb Group from SIBO. How time flies.
It doesn't seem to be possible, sir.
It is. It's very possible, I know, because I spent all day on an offsite, which can be a volatile event. And it was because, some people didn't survive the offsite. And then basically I've been paying attention to product usage an awful lot in markets well beyond VIX, which was kind of my specialty when I was at SIBO, paying attention to a lot of the other methods of getting volatility exposure, like the spikes, which is
why you're holding down the spikes hot seat.
That's why I'm sitting in the spikes hot seat. And I had been keeping an eye on them. I was absolutely thrilled to see that they continue to build up a little bit of volume over there, because I've always felt like we needed to build the ecosystem. I would even say that when I was working for SIBO, that I always felt like if we could just grow the pie some more, it would be good for everybody, that it's not not. We kind of like at the end of Caddyshack when Rodney Dangerfield announces that we're all going to have a good evening in a quite different way. I do think if you can continue to grow this space, get some legitimacy and credibility around it, because every once in a while something happens that we seem to lose credibility around, that it will be good for everyone. So I'm thrilled to see that the spikes are doing well.
Glad to hear it, sir. And Mr. Meatball, what is lighting up your tape out there in this topsy-turvy, tumultuous volatility week?
Well, I guess, interestingly, as volatile as the S&P has been, and normally, I'm primarily kind of an equity trader and index trader and VIX trader, but did you look at what happened to oil yesterday when this news came out? I know you're doing TWIFO after this, I assume.
We actually did it yesterday, yes. It was interesting to see, yes.
Oh, my gosh. Oil went from down. It was already down on a strong dollar, but it dropped, 8% in about 3 minutes. It was some of the heaviest selling I've seen in a product like that. I can't remember the last time I saw a move like that. That's like, you would see a move like that maybe in the other direction if something kind of geopolitical crazy happened, but you wouldn't expect to see something like that on a downswift on just some tariffs. But they absolutely slaughtered oil. Vol popped. VIX touched 20 today. Vol futures went from 14 to 18 in about 2 days, so they can move. And so it's been just a heck of a last 2 days. And you have to wonder where does it end. I speculated that this was kind of like in Trump's mind, killing two birds with one stone. Right? He raises tariffs, and he's hoping he gets two things. He gets more aggressive rate cutting out of the Fed. They specifically mentioned this as a risk they were paying attention to. And then he potentially gets more, hopefully can push China to start talking, because they are having problems over there. They don't like to admit it, but they have definitely seen better days in their economy, and this is going to give them some issues. So he's swinging he swung a pretty big club here, and what's interesting is I don't think you're going to see, and maybe I don't know if you want to wait for my analysis here, but I don't know that we see kind of the total craziness that we saw last year, because I think we have a better idea of what the landscape looks like with tariffs and what they actually do. And I think you're going to see a day or two of this selling.
Did we lose you, sir? Are you still there? The Meatball.
But I'll tell you, I don't think we'd seen a commodity move like that, like what we saw in oil since like a gold move that we got 7 or 8 years ago. That when you looked at what the gold volatility indexes were expecting, turned into a seven standard deviation move. But that's
of course, not to get all TWIFO on us here, but that's kind of what we were talking about last week. We had actually some great market makers on last week on the TWIFO program, where they were talking about how that upside to the WTI curve, the calls just can't catch a bid to save their life. And every time we see a rally up there, everyone just takes that excuse to just dump all the calls they possibly can, because they know it's going to be very short-lived to the upside. And that's kind of what we've been saying, that's kind of a sign of the systemic weakness of the demand for crude out there, and that hasn't really changed. And crude actually up a bit today, up about a handle and change. So maybe getting some of that annihilation we saw out there, getting some of that back. Still not even at the 56 handle out there in WTI, but still a little bit better than where it was after the nadir of yesterday's sell-off. Let's look out here to the futures and see what we're seeing out here in VIX land. Of course, they're backwards as all the day is long. A day like today, you're going to get that. The cash is kind of the cash is kind of its own beast on a day like today. It's going to do what it's going to do. The future is a little bit more level-headed, but still we're seeing that gulf, that chasm opening up there on the front portion of the curve between the cash and the AUG future. The cash come into right about now actually is about exactly a point higher than the AUG future. The AUG future at about 1845, the cash at about 1945 there. The SEP future off at about 1820, so actually about a point and change discount to where the cash is right now. Of course, that'll settle out eventually out there. Mr. Meatball, anything weird or bizarre catching your eye out here in this weird and bizarre term structure we have this week?
Yeah, the term structure has definitely moved. It went from heavily contangoed to now backward in about 3 days. It just shows you what geopolitical can do. And, I've talked to my broker friends. It's interesting. We did see a lot of VIX call buying in the last week or two. The famous 50 cent was allegedly back, and we saw a lot of call sweeping. They're happy. But notably today, VIX is kind of quiet, but SPX is moving all over the place right now. A broker friend of mine just told me he traded about 10 risk reversals and then did a bunch of interesting kind of downside 1x2s and some things like that. It was pretty interesting that, now that we've gotten the vol move, they're going after SPX. I've got a few interesting trades that I saw in VIX, but, I think my favorite trade was a customer bought, several thousand of the SEP 21.5s to sell twice as many of the October 17.5 puts, and they did that for a credit because if you look at the way the curve has moved, way out of the money downside skew has absolutely exploded in SPX, and that's where I think if you're looking for where's the real volatility, call it appetite, it's in that kind of out of the money stuff. It's not the meaty options. It's the kind of far, like heavy Vega, small, low price options where things are really moving around.
That's the fun part of the curve, right? That's where things are getting wonky, getting crazy out there. Let's see what's going on out here from an overall activity land. You just started talking some activity, so let's get into it here. Let's kick things off in Spikes land. Kind of an interesting week out there. Mostly OI kind of unched from where it was last week. The number. Let's go back, break down the top 5 out here in Spikes land this week. Number 1, still with the bullet, are those SEP 25s. That big size 1x2 call roll we saw out there. Still open. Go figure. Worked out. Good timing on that guy's part there. SEP 25s, 10,000 of those. Number 2, the AUG 26s, 6,166 of those. Number 2. Number 3, 5,000 of the SEP 17s. Number 4, about 3,500 of the AUG 18s. And round out the top 5 here, about a little over 1,000 of the AUG 24s. I know you're kind of just holding down the Miax hot seat today, Mr. Rhoads, but I'm kind of curious. Have you been watching this kind of size paper we've seen go through the last couple of weeks? We, of course, had the big 1x2 to kick it off about a month and change ago, and then he kind of rolled it over the course of last week. And, of course, looking at this OI here, we're starting to see more of, the little guys out there starting to come in. We're seeing the 10 lots, the 20 lots, the 50 lots going up, which I think you kind of want if you want to see a healthy product ecosystem start to take shape. But under your purview over there as the director of all derivatives research at Tabb, is this a product that has come across your radar, sir?
Oh, yeah, absolutely, because I'm actually working on something in the second half talking about new products and what seems to be catching on, and this one is definitely going to be included in when I highlight what's going on in that report. I had not seen the 1x2 that you were talking about, though. I actually just pay attention to the overall volume, not exactly the specific strikes that are trading, and what's been going on with the open interest, which both have been pretty respectable for something that's relatively new. This is the second go round with the spikes, but the first time that somebody's really put
first time doesn't really count. It didn't really get any contracts.
Well, that's what I was getting ready to say. Is the first time was definitely a mulligan, and I bet you can't find anybody that'll talk about the first time. So, because I don't even think they're around anymore.
No, they're not. I have asked.
So we're going to say this is brand new. Totally brand new.
It
is.
I mean, I have teased the former holders in the past. I've teased the SIBO. You bought bats to get that spikes out of the way there, but it worked out. Miax got it, and they actually listed it, which was nice because until then it was just a theoretical, just a pipe dream in the world of volatility.
I was just say one other thing with respect to, and hats off to the people at the Miax, is they were known for doing a very good job of pushing everybody else to upgrade their technology, and this is their first foray into a new product, and I think they've done a pretty good job with it.
Well, yeah, the numbers don't lie. They've got 27,000 open right now, which for a product with, a few months under its belt, it launched at the beginning of the year. I mean, going back to the early days of VIX, how long did it take to get 27,000 contracts? Probably quite a while.
A while. And beyond that, they haven't really had a volatility event, which is one of those things that gets everybody to be looking at your product. They haven't benefited from one of those quite yet. So
we'll see if this week qualifies as the volatility event. It certainly is driving some paper. It's not quite a Febocalypse or anything along those lines yet. It's more just a tweet storm, but it's certainly having its impact here, wiping off. Between going from the upside and then to the downside, yes, wiping off 2.5% there in the markets in the span of about an hour or so. So that'll leave a mark. Let's move on here to see what's going on. Obviously, we talked about it last week. It kind of kicked off VIX volume maybe being a bit of an indicator last week, Russell, because we started to see maybe the canary in the coal mine last week of this weird uptick in paper, and we were joking last week. Is it 50 cent back? Is it our old friend the whale? Is it something? Is it all? It's kind of like all of the above came back. In fact, they had some people in here this week who were talking all off the record here about what's going on out there, and it's kind of fascinating because they're saying the same thing. It's like this, that one storm of paper ignited a bunch of people to come back into VIX, and all of a sudden everything is lighting it up. Flies, the 1x2s, the straight up call love that we saw out there with 50 Cent and others. And we're seeing a lot of that here this week. Coming into today, a pretty active day again today. Go figure, the market's selling off pretty hard. 700,000 contracts on the tape. The ADV is a pretty seasonally healthy, over 500,000, 533,000. Usually this time of year, VIX is struggling to get any paper. And in fact, that's up 100,000 contracts from where it was this time last week. So that shows you how much paper has been lighting it up. To bump the ADV 100,000 contracts in the span of a week, that's a lot of paper. Let's see what was lighting it up coming into today. Here are the top 10 VIX options position. Let's start at number 10 here. The AUG 21s, $156 on the tape. Number 9, the SEP 20s, 158,000. Number 8, the AUG 37 halves, 168,000 of those. Number 7, the AUG 18s, $191 on the tape. Numero 6 here, the SEP 24s, 205,000 contracts. Number 5, the SEP 25s, a little bit of SEP upside love there, 211,000 contracts. Number 4, this AUG 25s, 226,000. Number 3, the SEP 23s. Getting a bit of a call love feel here, Russell. SEP 23s, 250,000 contracts on the tape. Number 2, the AUG 19s, 263,000. And round out the top 10, not a single put to be found. That's the first time in a while we've seen that. 434,000 of the AUG 20s. Mr. Meatball, does that surprise you? Actually, open interest total about 9 million, 6.8 million on the calls, and about 2.2 million on the puts. But Mr. Meatball, excuse me, does that surprise you that we don't see as nary a put to be found in the top 10 out here in VIX today?
No, I mean, I think that we saw, I don't think the open interest on the downside has decreased very much. If anything, it's probably gone up. It's just there's been so much upside trading that it's just kind of pushed the puts lower. I'm guessing that there's a whole host of puts that are in 11 through 20 would be my guess. And notably, we have seen some customers come in and try and sniff for, some sort of reversion, because there was some decent buyers of the September 15 puts today. By the way, Mark, you're going to like this story. So I did Bloomberg yesterday. And
I'm already hating it.
My idea was to buy a VIX 20-25 call spread. But before they got to that, they asked me about oil. And, you mentioned that it's up it's up back above 55. And I said, I think oil's probably a little overdone. And here's how I phrased it. And here's how I wish I had rephrased it. Because I said, with oil down here, you're going to start seeing some bottom sniffing. And I wish I hadn't put it that way, because I don't want people sniffing bottoms. That's just me.
There you go. Now you just lost your invite back to Bloomberg, sir. Well done. Winning friends and influencing people, as always out there. Speaking of as always, we haven't been able to do this in quite a long time. It used to be an always every week feature on the show, but I'm happy to bring it back. It is time for the return, the much heralded, long-awaited return of Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Listeners, it just brings a smile to everyone's face whenever that. I haven't played that music in so long, Mr. Rhoads, so it's worth getting you in here just for that, if for nothing else. But now your theme music has played. You are officially announced, sir. What do you have up your sleeves for us this week?
I couldn't find anything.
All right, we're done.
We're done with it.
That's the end.
No, it was always you gave me this difficult task, and I accepted it years ago. Foolishly, and you know, it was like, you know, finding a needle in the haystack and all of that kind of thing. And then it got easy. It was pretty easy. I actually got to be picky with respect to talking about some of the trades using the non-standard VIX options, or now also the non-standard spikes options. There was not a whole lot going on. Today, there's been a little bit more going on. Probably the most interesting trade of the week. Looks like somebody sold the August 28th 13-14 put spread, took in 20 cents on that, and attributed that 20 cents to buying the August 28th 32.5 calls, which they paid 31 or 32 cents for. So let's say they sold the put spread, bought way out of the money calls, and paid 12 cents for that. Also, somebody did come in pretty early this morning, bought I think 100 or 200 of the August 28th 18 calls and paid $1.81 for those. Maybe somebody has some insight with respect to what kind of tweets are going to come out of the White House, and they are getting long volatility in front of that. Yesterday, somebody bought a couple hundred of the August 7th 17 calls. Somebody bought 50. See, I'm really stretching now. 50 of the September 4th 15 calls.
Was that you, sir?
230. What, stretching?
50 lots.
Yeah, that was that. No, I think that was Mark Sebastian. He's just to give away his trades. And then Wednesday, there is the most unusual trade I've ever come across when I'm dealing with the weeklies. I can't figure out who's buying or selling, but 360 of the August 14th 18 calls, 710 of the August 14th 19 calls, and then in the same lot, 497 of the August 7th 20 calls. And the spreads are so bad on those things. It looks to me like they bought all three of them, which is it's doubtful. That would be a weekly super stupid. I just can't even. The other thing is, when I'm trying to read into these, I'm always trying to think, okay, what are they trying to accomplish here? I can understand what you're trying to accomplish when you sell a put spread.
That might be my new favorite trade name, a weekly super stupid.
A weekly super stupid. that goes right along with the when you create a new when you give that guy another bowl of soup to create an intro song for me. I wanted to include the phrase super stupid.
Now you're doing all this education over there at Tabb. You can add that to your arsenal. Now we're going to learn about the weekly super stupid.
Now I'm going to talk
in
about
VIX options. How to throw all your money away in 3 easy days.
Oh, I can totally show you how to do that. So back to school shopping will do that for you instantly. So that was really about it. Monday, a buyer of some of the August 7th calls and a seller of some of the August 14th. Lost my strike on that one. August 14th, I think those were the 20 or 21 calls, which might not be too happy about right now. One interesting thing was, with the exception of that spread, there were no puts being traded. And I think whenever we go into backwardation, the opportunity to try and take advantage of that slow grind that we get during contango goes away. And typically when you're trying to do those sorts of trades, you want to use shorter dated put options. So no put showing up on the board at all, with the exception of that one spread combined with a long call.
Yeah, I think the overall dearth of puts is a theme here this week. We just talked about the top 10, not a nary a put to be found in that top 10, which again is unusual. Usually we have at least 20 to 30% of that top 10 somewhere in the put land, and this week none of them. So maybe, again, that coming to show just kind of what paper we've been seeing going up out there. And what a crazy week it has been. It's kind of like, is it 50 Cent? Is it the whale? Is it others? Is it some mix therein? It's kind of some haphazard melange of maybe all of the above, listeners, because someone came back for size, and it seems like it woke everybody up last week, and now everybody's coming to play. And they're coming to play for pretty decent size. Mr. Meatball, you kind of talked about one of those trades that caught your attention. Anything else on your radar this week? Because there was certainly a heck of a lot going up out there in VIX options land this week.
Tons, and a lot of buying August to sell SEP, selling SEP to buy, or buying SEP to sell August. There's really a lot of people strategic playing, when is vol going to blow up? And a lot of guys are taking the opportunity to roll here, and it's been fascinating. There was a decent-sized cash spread that went up yesterday, but most of what I've seen is, we're looking to sell August 24th to buy SEP 28s 1 by 2. They're looking to go higher and increase their size a lot of times, or alternatively, they want direct exposure, and what they want to do is buy like August 24th, sell SEP 26 calls and pay even money. It's been really fascinating the way paper has moved, and the way they're all positioning themselves. There's a lot of computer screens crashing against each other is what we used to say. They're having sword fights with tablets, trying to position themselves properly. And but if you look, there's just a ton of Vega going up, and you have to wonder whether they're pricing themselves in. August is traditionally one of the worst months, if not the worst. So I don't know why anyone's surprised that on August 1st we would begin a 2.5% sell-off. And I don't know what it's going to take to get us to rally back. I'm not sure, like I said, that we're going to have some sort of crazy sell-off here. But with everything on the table, what are the Chinese going to say over the weekend? Because if we have a bad close, we're setting up for the bad Thursday, worst Friday, absolute tank job on Monday. That's kind of the, Mondays tend to be, they tend to come in threes, right? Thursday, Friday, Monday, and then you have your turnaround Tuesday. And, the way this story is set up, it really does set up perfectly for that kind of trade. The last time we saw the 1, 2, 3 punch like that was in 2015, when we had that massive VIX blow up around China, and lo and behold, we're set up to have China potentially blow vol up again. Just really interesting stuff, and this is a fun time to not have any positions on and get yourself positioned within the market. So I'm going to be looking for some trades this afternoon. I've got a few that I'm thinking about. And one more comment I would make is, for those that are listening or hearing this that are like worried, way out of the money upside in August is completely overvalued relative to near the money stuff. I was looking, earlier today, VIX was a little lower. I could buy the 2026 call spread for like 80 cents or something like that. They're bidding up everything 25 and up is just incredibly expensive in August. The near dated stuff is really the near dated at the money. There's value there if you think vol is going higher.
It's a palooza of madness out there this week in the VIX landscape, listeners. Just running down some of these trades, it'll take quite a while. The big print's going up today. Like you mentioned, already 700,000 contracts on the tape coming into showtime today. Looks like there's an AUG 2328 vertical that paper's liking today, 28,000 times, one of the big prints going up today. We're also seeing, like Meatball mentioned, all sorts of rolls and dalliances out there between AUG and SEP and ACK and NOV. 11,000 of the ACK 25, NOV 24 call roll slash diagonal there going up today, 11,000 times. AUG 1528 risk reversal, 8,000 times going up there as well. ACK 26 is going up straight up, just 98 cents. Paper loving those bad boys today. 31,000 of those up there as well. AUG 18's got to get those through the offer. 20,000, almost 21,000 of those as well. Some puts, actually, there were some puts to be found out there. SEP 15 puts lighting it up today, 20,000 times out here. Looks like a SEP AUG roll, kind of what Mr. Meatball was alluding to before as well. SEP 42 half, AUG 47 half, so probably rolling from the AUG to the SEP, even though it's an interesting time to be taking AUG off, but AUG 21st, actually, by the way. So, yeah, doing that 20,000 times, it's like for 14 cents. Yesterday was also another big day at AUG Call Palooza, I think is the only way to term it yesterday. The big print was 82,500 of the AUG 21s for 52.5 cents, going up, of course, mid-market. They were 50 at 55, going up 52.5, so splitting the uprights as they are wont to do out there in VIX land. Also saw 45,000 of the AUG 20s going up for 50, almost 51 cents through the offer there as well. So between those two trades, you have over 120,000 contracts just in those two trades, one strike apart, of course, because why would you spread it out like that? Let's keep it tight out there. NOV, if you like the verticals and the ratios, we know you do, listeners. They're out there as well to be found, hiding amongst a flurry of paper, including a NOV 1x4 yesterday, the NOV 2635. How you like this one, Mr. Weekly Rundown? There we go. How's that, Mr. Weekly Rundown? The NOV 1x, because you always talk 1x2 and they're a few strikes apart. This guy's like, nope, I'm going to push it out to NOV. I'm going to do it 1x4, and I'm going to do it, a nice 9 handles wide. He did 8,000 of the NOV 26 calls versus off the bid versus 32,000 of the NOV 35s. This is all opening. It looks like at least the upper leg is opening. So I doubt he's rolling on a ratio. It's probably opening a 1x4. How do you like that one? NOV 2635, 1x4. Doing it for, it looks like 80 odd cents here. He's got a debit on this bad boy. That guy's looking for a little bit of a trade war love. And by love, I mean lack of love for the market out there in November.
That trade until you told me what it cost. Seriously,
Yeah.
I expected it to be a lot cheaper than that.
Well, the NOV upside, not cheap.
Yeah, I just when you said he was selling 4 to buy 1, I'm like, oh, well, that's pretty smart. He's probably doing it for a dime. When you said 84 cents, I'm like, and that dovetails right into what Mark Sebastian was saying a few minutes ago, although he was talking about the August options, that the farther out of money you go, the more expensive those guys are. That they're just not, for some strange reason, he doesn't seem to be getting it out in November like that. I'm really shocked on that one.
Yeah, 45 cents for those what were those 37 halves. They're not exactly giving those away out there, and he wanted 4 of them, so you got to pay up, sir. That 80 odd cents you're getting from the bottom leg is only going to go so far, especially when you want 4. You 1x2. I got you. You're pretty good. Yeah. Now you're pretty much doing it for even money.
I just thought they'd found the deal of the week. That's all.
No, doesn't appear that way, sir. Let's go out to Wednesday really quickly here. Size paper on Wednesday as well. AUG 20s was the big print of the day, nearly 51,000. Actually, looks like there was a bit of I guess you can call it an AUG vertical, maybe with the NOV kicker. There's another NOV leg that went up a couple of seconds later. I'm not sure if it's exactly related, but it's around the same time. It was the AUG 2022 vertical going. It looks like a 1x2, Mr. Weekly Rundown here. AUG 50,817 of the AUG 20s for 44 cents versus 23,000. So doing it the other way, 23,454 of the AUG 22s for 28 cents. And also looks like maybe a bit of a NOV 21 kicker in between there. So moving the guts out to NOV, 28,000. That's why I'm not sure if that one's related. It went up almost exactly at the same time, but it has the whiff of being unrelated paper. Either way, there's a NOV vertical with some size, or AUG vertical, some size NOV calls. Tuesday was kind of the light day of the bunch. Some 13,000 lots. Everyone's got to take a rest sometime. VIX taking a rest on Tuesday. Monday, they were back at it again. 60,000 of the SEP 24s going up for 55 cents. 45,000 of the AUG 18s going up for 48 cents, and so on and so forth. Just a lot of madness. Before we roll off of VIX really quickly here, Mr. Meatball, what's it been like out there in the pitch chat this week? This is the kind of markets that those guys live for. What have they been slinging? What have they been trading up this week?
Oh, yeah, no, they were all kind of set up when, we talked about the VVIX being that low. Our guys and we run a vol newsletter that kind of puts out different ideas. And the main idea we put out had been a double X call spread with puts. And we'd done a long put combo in VXX and SPY. And lo and behold, both are working really, really well. That strangle that's that call spread versus put trade paid out awesome, and kind of the same type of thing on that swap, because just vol was way too low in the complex. We had done kind of a similar thing in our fund and made some nice dough on that. But I'm when you go to ask me about what I'm up to, I've got a little risk management story that I want to share with everybody when we have a chance.
I like it. Risk management from the Meatball. Speaking of risk management, that's a good segue into our next product, which is our old friend VXX. And sometimes I think we sound like nervous Nellies on this program. We're always saying, you guys love to fade it, you guys love to put on your downside, but have a plan, have something in your back pocket for when the worm turns out there, because it can in VXX. Then it wipes out all that juicy erosion and sets the clock back, and you got to do it all again. We saw it, probably most infamously earlier this year in January. Everyone loves the Jan, they love the long-term puts, and everyone was loaded up at 30 strike and below on the put side, and lo and behold, it danced with the 30 strike but never broke through it till after expiration, and all that juicy OI below the 30 strike went out worthless. So we say that every week. Maybe we sound like a broken record. Have a plan. I think we had a listener question about that very thing last week. These are the weeks that you probably want if you want to have that plan. VXX up about a little over 4 handles from where it was last show. So again, 4 handles. You know how long it takes for it to erode its way down there. You just got all that back this just in the last 24 hours or so. It's come off a little bit since the start of the show. It was at a little bit north of 26 now. It's right around a little bit shy of 26. The volume today pretty strong, about 205,000 contracts. That's pretty much the ADV. It's right around 217 out there. So a pretty hot day for VXX. Let's go look at what's open in VXX. Mr. Rhoads, it's the exact opposite of the tale we just told in VIX options. It's funny because for a while there it was mostly calls in VXX. It was about 70% to 80% calls out there, and then the worm has turned completely here. All of the top 10 in VXX are puts. Let's see, number 10 here, the SEP 18s, 27,000 of those. Number 9, SEP 19. Again, these are all puts, 27,800 of those. Number 8, the Jan 14 puts, our first Jan on the list here, and pretty pessimistic to boot. The Jan 14s, nearly 30,000 of those. The AUG 22s come up next. Number 7, 33,000. Number 6, the AUG 20s, 36,000 of those. Number 5, the AUG 21 half puts. That's an interesting strike for 39,000 of those. Number 4, the AUG 19 halves. Maybe a bit of a funky vertical going up there, 44,000 of those. Number 3, the SEP 20s, 45,000. Numero dos here, the AUG 20 puts, 46,000. And the top position out there right now in VXX options, SEP 17 puts, 53, almost 54,000. Does that surprise you, Mr. Rhoads, that it's all puts all the time out there in VXX land, or is that kind of what you expected?
It does not surprise me because VXX is a great way to get short volatility. It's always, I think it's ingrained in everybody that VXX is going to, in normal environments, is going to continue to grind lower. And there's always a good opportunity, as long as you don't get any volatility spike, to benefit from that grind lower. Maybe if you just took the volume over the last couple of days instead of the whole week, might be a little bit different. But because you're including when we were in steep contango earlier in the week and all of that, it's not overly surprising.
Yeah, if you load up on your puts on, let's say, Monday, maybe not the best trade. But outside of that, speaking of load up on puts, someone's listening to the show here because the 12,500, the AUG 23 puts just went up for 41 cents, lifting the offer out here. So more put love coming up out here. Let's taking advantage maybe of a little bit of a decline in those values. Actually, looks like a 1x2. AUG 26, 23, 1x2. It doesn't say it's a spread, but if it looks like a duck and it quacks at the same time, this has got to be a 1x2. The AUG 26 puts $1.70, 6,250 of those versus 12,500. So 2 of the AUG 23 puts, so doing that for 82 cents So doing it for close to 90 cents on this bad boy here, which is looks like a debit actually. So interesting. Debit 1x2. We talked about those before. Not as huge of a fans of the ratios in VXX as we are in VIX. Go back, listen to the show a couple of weeks ago. We had this exact conversation in there. I believe when I was sitting in the mobile lot up there in the northern studio, which is always a fun place to do a vol show from. Today, other big prints. Actually, are some calls going up today. 5,000 of the SEP 50 is going up for 46 cents on the offer. So maybe somebody taking the opportunity to fade this rally in VXX a little bit. 50, they got a long way to go, so maybe they feel safe up there. And then looks like August expiring on the 9th, so next week, 20 and a half puts going up for 4 cents. Paper getting a little bit of a flyer there as well, about 3,000 of those. Yesterday was a big day for VXX, as you probably would expect. The AUG expiring today, so these are going up today for 6 cents. The AUG 21 half puts for 6 cents on the bid. Looks like someone getting the heck out of Dodge. Or actually, this looks like a 1x2 as well. The AUG 21 half 22. They do it for half a buck. 1x2, 10,000 by 20,000 times, 15 cents for the AUG 22 puts versus 6 cents. So I guess roughly 12 cents of the AUG. So doing that for 3 cents, 1x2 times with that one. That one's an interesting one. I don't know why you'd put that on 30,000 contracts with a day to go. For a couple of cents. That's someone who just likes their broker, I think, Mr. Rhoads.
I actually think somebody maybe was expecting a Trump tweet that says "I heart Beijing."
They thought this they thought this was going back the other way in a heartbeat. Yeah,
or "I heart BJ," because
that's what you need.
You can buy over there.
You need the worm to turn again the other way for this thing. Because if that happens, you're right. This pays off, but. Yeah. And any other scenario, this is talking about ways to throw your money away in about a day. That's pretty much what this is. That's going to go down as not my favorite trade of the week. I'm just going to say that out there right now because it doesn't look too good right now. Spoiler alert! I don't think we're getting down to anywhere close to that range today. Who knows? The worm could turn. I say that, and we could be back to 21 by the end of the day. And this guy looks like a genius, but right now at least. Not so much. Also, 10,000 of the AUG 21 puts going up for 8 cents. Those are on the bid. Looks like against another 1x2. 5,000. There was 1x2 Palooza yesterday out there in VXX. AUG 2221 1x2 going up 5,000 by 10,000 times. Got to be probably the same guy, you would think. And doing it for, looks like 21 to 16. So paying a nickel for that one. Again, same analysis on that one. I'm not loving either of those. Size 1x2 put spread. SEP 15, 17, 19 on Wednesday as well. What's up with the 1x2s? We were just talking, maybe they must listen to the show. We were just talking about these like a week ago. We were saying how people don't do them that much in VXX, let alone to the puts, and bam, here they all come. Let's see, 62 versus 28, so you got about 34 cents on that one. 5,000 by 10,000 of the SEP 19, 17 put spread. I like that one. We got a little more time for that one to pay off. That's a little more aggressive as well. I don't know, Mark and I talked about this before. Are you a fan of ratio spreads in VXX as a concept, and then add the addendum of what they're doing, which is the put 1x2? That seems to be the order of the day. You a fan of that one in VXX?
I kind of am. I did some work on this back in the day that I did nothing but pay attention to volatility, and I would look at some of these things that would pay off very well if you did them a week in advance and you hit that. There's kind of an average move to the downside that's pretty consistent when not a lot's going on in the markets. And if you wanted to put a 1x2 on and maybe catch that, shoot for that strike right there, I always felt like it made some sense. And then as long as you didn't have a lot of exposure to the upside, you could consistently do something like that and do okay with the markets. In that way.
It's a way to make it a little more to keep yourself at the table, right, until you get that. Yeah. But just in general, you usually need a nice bang for those to really work out. And VIX is going to give you that 9 times out of 10 versus VXX. VXX can do it. It's not immune to it, but I like that a lot better in VIX. Let's keep on rolling really quickly before we get into some of your questions and go into the crystal ball. Really quickly, we'll touch on the earnings this week. A lot of earnings vol. We had Beyond Meat, which continues to dominate the headlines. We had Fidelity on here yesterday. I almost called you Rock Lobster. I apologize, Mr. Rhoads. They were saying Beyond Meat was the number one ticker on their beyond SPY, beyond VIX, beyond anything at Fidelity yesterday. That's how much action how much action Beyond Meat. Fidelity, not a small platform. and
beyond that, it's not the kind of platform that active traders use. I'm actually been talking to all of those guys lately about the just the different ways that people trade and looking at the different idiosyncrasies between somebody at Fidelity and somebody at one of the more active option platforms, and that people spend a lot more time trading options. Fidelity is not like it's not a trader's platform. It's really more of an investor's platform. So the fact that they're looking at Beyond Meat, that makes me weep for the future.
Well, that's why they're talking to us. They want to try to change that perception. They want to get in there. They want to be known more for the hardcore guys, right? That's why they're talking to us every week, which is always fun, because you're right. People think of Fidelity as mutual funds and very staid things, a little bit of stock here, an IRA there. They don't think hardcore 1x2s in VXX. That's a perception I believe they're looking to change going forward. But we saw Beyond Meat lighten it up pretty much every day. It doesn't need to be earnings. Earnings is just a bonus for Beyond Meat. EA and Sony on Tuesday. GE and our old friend CME across the street there on Wednesday. On number 4, GM and Pinterest. Number 4, Thursday. too many orders of lists on this show today. GM and Pinterest on Thursday. And today before the bell we had Exxon and Chevron. Maybe some of that contributing to the lift we're seeing out there in crude coming into the show. If you want the full vol breakdowns for all those earnings, get them over there at theoptionsinsider.com. Listeners, just go to that options news and articles tab on the top there. Click on that. You'll see all the earnings reports and earnings move results reports, courtesies of our friends over there at ORATS. Meanwhile, it's time for you guys to come on the show with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right. Welcome to the Vol voicemail. This is the portion of the show where you guys take the reins, your questions, your comments, your pearls. I like this. This is my favorite comment of the week. I think this is from one of your fans out here, Russell, Kid Sinclair, because he found out you were going to be on the show, and he just tweeted out, Russell! with a bunch of exclamation points and a smiley face. So at least one person was very excited.
I have a fan.
You have one
What's
fan.
What's up, Douglas?
And it is
I know his real name.
It is Kid Sinclair. I'm going to call him. It sounds cooler to say Kid Sinclair.
I like it a lot.
I'm going to call him Kid Sinclair. But he was clearly very excited. He's probably listening right now. Hello, Mr. or Mrs. Kid Sinclair out there. So there you go. There's your one fan out there, Mr. Rhoads. All right, let's see here. Tinker wants to know. I like the handle. Tinker, do you think there will ever be another inverse volatility product? Well, funny enough, I just asked that exact question to an SEC commissioner late last week. It hasn't hit the network yet. Hopefully it'll hit it soon, maybe as we speak. So you can hear her answer for your very self. But it was interesting. I know you guys have this on the brain, so I thought I would put that to the powers that be and see what they have to say. A short answer, it doesn't seem like there's going to be one anytime soon. Let me just put it out there that way. But I don't know, let's go out there, Mr. Meatball. Do you think we'll see an XIV again in our lifetime, sir?
Do we think we'll see an XIV in our lifetime?
I'm being facetious, but in a reasonable, in the next few years, maybe.
I don't know. I think that some of these groups have a bad taste in their mouth. I don't know how you pitch something like that. You'd have to have in order for an XIV to be put out, you'd have to do it with some sort of, TAS defense, so that they don't get tripped up by only trading the TAS. You'd need to have some sort of a protocol that allows them to go into the open market to buy their end-of-day vol, because if we'd had that, then we would not have had the vol apocalypse. So I don't think you can see the exact same product, but you absolutely could see, maybe a first cousin of that product show up someday. You'd need somebody with deep pockets that is willing to put on that kind of risk. tell you where we won't be seeing it from is Credit Suisse or ProShares.
Yeah, I think that's a safe bet.
I think that's a pretty safe bet. But I think that's the key, right? If if they were not reliant on trading the TAS, then XIV does not blow up, and more so, the SPXY guys are in better shape as well. I'm a little surprised we haven't seen ProShares sue Credit Suisse for all the trouble they've had, and so it'll be interesting to see whether a product like that comes back. But the iteration would have to have some sort of protection against that type of end-of-day exposure that can build up in the TAS.
Yeah, I'm surprised. I mean, you see all this, obviously, legislation and lawsuits around VIX and manipulation and all this nonsense. I'm surprised we haven't seen more around that quote-unquote acceleration event and all the wreckage it left behind, not just for XIV, but we saw SVXY get adjusted effectively intraday and really screw over the entire options market in the process. So there's a lot of room for lawyers out there who want to be litigious, and yet we haven't seen a lot of forays into that space, which is surprising. Mr. Rhoads, what do you think? You think we're going to see another inverse volatility product in our lifetime, sir?
Yes.
Oh, look at you! Very
I know, but it's not going to be based on the futures. With the advent of more and more smart beta related ETPs, I think you're probably going to have somebody that comes up with some set in stone strategy that maybe buys puts or does something, option strategy wise that does have some sort of limited loss to it that turns into an exchange traded product.
All right, we got to keep on rolling, get into our final segment. It is time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Spoiler alert, we all lost this week. Nobody. I don't think, Mr. Meatball, you didn't have like a 19 or 20 handle in your back pocket, I don't think. Did you?
No, I didn't.
No, I don't think either of us did. Since we all lost, do you want to do your risk management story now instead?
Yeah, that's all right. So I want to tell you a story about me losing money.
These are fun stories. Settle in, listeners. Grab the children. Sit them around the old computer to listen.
Yesterday around 10 a.m., I bought, just as like my first soiree, I was pretty flat into kind of yesterday's open. So after things seemed like, maybe we're just going to rally off of this, I bought 150 of the XX August 30th, 23 puts, and I paid $1.55. 2 hours later, 3 hours later, I'm sitting in front of my desk, having a really good mentoring session, and I see the news, and I see vol blow up, and I sold out of them at $1.04. I lost $7,800 in about 3.5 hours. And you're saying, why am I talking about that? Well, because my assumption had changed. Everything was going to be okay. Everything had been, kind of thrown up in the air. And so I took my trade off the table instead of being stubborn. Well, I had a similar story with a mentoring session I did last night. I just got this client, and I had been going back and forth about closing his cheap options. And he had been short a nice chunk and didn't close them yesterday morning. And they went from 90 cents to $4. The guy had been up on these a lot and was now sweating trying to figure it out. And, this goes to the whole concept of closing trades. If you're Citadel or Susquehanna that's trading, in a week, several million contracts, the idea that you don't shut down your worthless options, maybe you can make some sense of it because you have enough instances where the little pennies you're picking up pay for the times you get punched in the face. Your average retail trader, even if they're trading, let's say, 500 contracts a month, that's 6,000 contracts a year, 60,000 every 10 years. In 100 years, you trade 600,000 contracts. So it takes you 100 years, and you still have not traded what Susquehanna is going to trade in a couple of days. you don't have those probabilities working in your favor in the same way. Shut your trades down. Why? Because now when we have this vol blow up, you're in a position to actually go out. You've got plenty of bullets, plenty of money. You can go out there and make money. Today, what I'm going to do when I get off the phone is go and put on a trade that I think is going to make me a ton of money for my investors. Why? Because I ate $7,800 yesterday. So where are those trading? They're trading about what, 40 cents now? Yeah, so they're about 45 cents. So I would have lost more than double what I ate yesterday by being stubborn. So my point is, one, when your assumption change, close your trades, and two, when options get cheap, unless you are Citadel, unless you are Susquehanna, close your freaking trade and be ready to make money in an environment like this. And if you don't know how to do that, call me.
Well said. And let's all make some money together as we try to prognosticate. This is the making money section, right, Mr. Rhoads? This is the easy money part of the show because we all had.
I'm going to tell you where the VIX is going to be.
We all had a 19 handles, and since none of us won, Mr. Rhoads, since there were no winners last week, I was about 6.5 handles off. Mr. Rock Lobster was fading the other way. So he was like 8 handles off. So we won't even talk about where he was. But spoiler alert, none of us won. So we'll be charitable. You get to go first this week because you haven't been on in a while.
I've never gotten to go first.
Are you going to do your old school?
Because you have to win. And then
yes, you're right. You had to win, so that was a challenge for you because you were consistently buying the VIX, which would have actually worked out this week. This was the one week that would have worked out for you.
I know. So do I get my guess from the last time I was on? Which means I won.
You want me to go dig up that?
I actually, after years of humiliation, I put pen to paper and wrote a model that would that basically would have defeated you guys on a consistent basis. And you know what the model said?
It said 6.
No, it said just guess where you are, where the market is when it's guessing time.
Oh,
so I'm saying,
unched week?
I'm saying 19.
All right, yeah, we're
19.
Coming into the end of the show time here. Let's see, VIX cash. Let's go to
I'll just
VX.
I know we're bumping against time, so I'll say 19.
At about an 18.5, where I just had spikes up. There we go. Let's get spikes. VIX cash at about an 18.5, and spikes at about 19 even, so about a half a point premium there.
All right, then I'm doing 1875, 1875.
1875. We'll make it easy because that premium. We actually have a listener question we didn't get a chance to get to about that premium has been evolving. Spikes is up a half a point, then it's down by like a quarter point, and it's kind of been all over the place. We've gotten some of the reasons of why that is. I think we're going to do a deeper dive into that when Simon comes back on. So listen, everyone who's been asking about that, we'll get to that. So I think we're just going to make it one prognostication going forward because every week it's kind of evolving. There's a dividend and SPY. There's a bunch of things that are kind of gumming up the works there.
The average of the two is the way that you play from here on.
Yeah, we'll just make one prognostication. We'll be it makes it easier for you. You have 2 shots with one prognostication. So if you're closer to one than the other, we'll be charitable. All right.
Everybody wins.
Everyone's a winner here on Volatility Views. All right, and let's go. Since Mr. Meatball or Rock Lobster was so far off, I will go next. Like you said, 1875. So you are playing the upside game. We got a week for some of this China madness to fade a bit. I'm going to feel a bit of a fade, but not a ton. I'm going to go down to say about 15.25 for me out there. So roughly close to 4 handles below where we are. 3.25 on VIX cash and about 4 close to it on spikes. All right, Mr. Meatball, that opens up a lot for you. You got 18.75 on the upside. You got 15.25 on the downside. Where do you want to hang your hat, sir?
Here's what I'm going to put a caveat. I think we're going to trade well into the 20s early next week before we settle at, I'm going to say, Russell guessed 1875.
He did.
So I'm going to guess 1785.
All right, 1785, uncharacteristically not aggressively fading pick from the Meatball there. All right, listeners, unfortunately that music means we did it. We made our way through another epic journey through the world of volatility. Oh, what a journey it has been. The return of Russell's weekly rundown. How fun was that? I know at least one person out there was very excited about that. And, of course, talk some VXX, talk some VIX, talk some spikes, talk all that good stuff. But before we go, let's go back around the horn. Mr. Rhoads, as our guest this week, if folks want to check out what you're working on these days, maybe take one of your educational classes over there in the land of Tabb. Where should they go? What should they do, sir?
Well, Tabb Forum. I'm always talking about what's going on the Tabb Forum, along with another half a dozen or so folks that work at Tabb. I've got a weekly newsletter that comes out. It comes out on Saturday mornings.
Is it called Russell's Weekly Rundown? In which case, I'll have to sue Tabb, unfortunately.
I don't know. It's the Derivatives Weekly Newsletter. It's something we didn't have enough brain power behind enough creative brain power coming.
They don't have the branding resources that we have here.
So, but yeah, Tabb Forum. That's where to find what I'm up to.
Tabbforum.com. You got to register, but it's free. And then you can check out Russell does some webinars. If you want to see him in person, maybe you do. I won't hold that against you. Then you get on over to Tabb Forum and see him over there, as well as a lot of his research and stuff. And Mr. Meatball, if they want to learn more about adjusting your puts and all the other good stuff and your risk management and everything else, where should they go? What should they do, sir?
Yeah, come to optionpit.com, and then and you can email me, mark@optionpit.com, if you're interested in learning from me. And make sure you're checking out our YouTube channel. I'm laying massive knowledge on a weekly basis.
The man's laying massive knowledge. Check him out over there, optionpit.com and youtube.com. Search for the old Option Pits, and you'll find him there. And on behalf of the Meatball and Mr. Weekly Rundown, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for struggling through the live there. I know there was some audio issues there. And, of course, we'll see you back here next week for more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. Or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.